Welcome to Das One Hunt. I'm Xiao Pierre Ruth for Information Week. And in this episode, we're taking a look at, is regulation thawing on the decentralized finance space? There have been some changes, obviously, that have been happening in Washington, D.C., but there's also been momentum of regulators that were and what might be in this space potentially getting a different kind of understanding for how this space is evolving. So to dive into this conversation, to dive into this topic, again, I've assembled a good group of folks who are, again, more knowledgeable than me on this. Today we have Wenny C, partner with SynFutures.
Correct.
Martin Rijke, head of growth for Maple Finance.
Yes, thank you for inviting me.
Alan Orwick, co-founder for, is it Quai?
Yep.
Quai.
Yep. Thank you, JP. Appreciate you being on. Yep.
And Gerald Gallagher, general counsel at Sei Labs.
Morning.
All right. All of you, thank you so much for making the time.
Great to be here.
Yeah, thank you.
Look forward to jumping in.
Okay. All right. So, Alan, do the incumbent financial institutions have the means and interest to engage in the decentralized finance space? Is this something that they've, whatever pushback or grumblings initially that might have been happening, that they started to kind of like come around to and look at like maybe that this is something that they might want to, try to like approach and try to compete in?
Yeah, great question, JP. When we look at the history of Bitcoin and the history of DeFi, it's an emergent thing that actually competes with traditional finance. And so it's lived in its own bubble and its own island. And we've kind of gotten to that point where crypto is finally at first they fight you and then you win. And they're starting to onboard into what we're building in terms of our decentralized solutions. Just today, we're seeing news that BlackRock is announcing a 1% to 2% target allocation for their fund portfolios and allocating things and funds into portfolio allocations around IBIT. So we've seen the legitimacy around crypto. We're seeing the advancement of funds, of ETFs, and the adoption of crypto as a whole. So I think the people from Wall Street are beginning to look at crypto and saying this is an inevitable at this point. So it's just a matter of when institutions come. I think the institutional cycle for crypto will be one of the more boring ones, but it's going to be an exciting time as we see the emergence of stablecoins, RWAs, and other assets being tokenized on chain. And I look forward to Quai being part of that future.
Gotcha. All right. Appreciate your insights on that. Wenny, where is decentralized finance being embraced? Are there jurisdictions and nations that have been, very more amenable to DeFi?
For sure. So we really started SynFutures back in 2021. That's what we call DeFi summer. Through the years, we have been building, communities in different regions because we are fully on chain, fully permissionless, a decentralized exchange, and we see the strong adoption comes from regions where, there's a strong retail participation enthusiasm among the crowd. And in Asia, I would say Korea and Vietnam shows the best, adoption and the participating in our all types of on-chain campaigns has been great. However, there are other regions, let's say, Argentina, where their traditional finance system is underperformant and the users are more willing to participate in on-chain because, as we know, the on-chain economy is still a very USD dominant economy. Everything is denominated into US dollars. And I was fortunate to work with a few regulators through the years in Hong Kong, in Singapore, and also in Switzerland, and also a few other offshore regions. I'm still very, very impressed on how pragmatic the Singapore, like MAS, Monetary Authority of Singapore, has been working with the licensing applicants through the years. They really took a fact-based approach, and they really are willing to listen to the feedbacks of the market participants. But unfortunately, this is pretty much pre-FTX event happens, and it's really stunning to see how the bad actors in the industry can take back the regulations momentum. But we are super hopeful. This year, the United States, after the election administration on board, we've seen a lot of heartening milestones that a lot of the SEC investigations been dropped, and we've seen more clarity or less clarity around the meme coins definition from yesterday. But we are very hopeful the open finance can be achieved in these regions. Yeah.
Gotcha. Appreciate your thoughts on that. All right, Martin, how are the incumbent, kind of following on the earlier question, how are incumbent financial institutions reacting to DeFi? We're kind of past that introduction point for DeFi, well past that, and there seems to be, broader and further understanding, so have those early perspectives changed and shifted?
Yes, excellent. I think Alan just brought up some really good points already on sort of, how they're looking at crypto as a whole. You obviously mentioned BlackRock, right? That they're now, doing that 1% to 2% allocation of the IBIT ETF into some of their other products. And I think if you expand it further to DeFi, you start seeing that, even BlackRock itself, they have already launched the Biddle Fund, right? Which is essentially bringing treasuries straight into DeFi. BlackRock is obviously the largest asset manager in the world. So I think that shows and paves the way for others to do the same. And we are actually experiencing that firsthand at Maple. So a lot of the large, traditional financial institutions are reaching out to us for our, expertise in DeFi. I would say that in 2022, the whole industry took a hit. And I think a lot of time has passed, about 3 years now. And a lot of these large institutions are realizing that what actually happened is not because of DeFi, but it was actually because of centralized players doing things that, weren't appropriate. And they are realizing that if you actually use DeFi, right, and you build things on chain with the transparency it brings, with smart contracts, governing the different actions, I think they understand the value of that. So you see that with BlackRock Biddle, you see it with Coinbase as well. They launched their Bitcoin backed lending product, which is also on chain, right? They're using Morpho, which is an on-chain lending protocol. And we generally see that a lot of these institutions partner with DeFi native companies. BlackRock partner with Securitize, and we are seeing that at Maple as well. So I think it's really exciting for all DeFi companies to build those partnerships with those large institutions and really get DeFi into the hands of mainstream. I would say the one clear thing that we need is some rules in place and sort of a playing field where everybody can play in. But I'm sure we'll discuss that further in this panel.
Awesome. Appreciate your thoughts on that. Gerald, and this kind of ties back to some things that Wenny was bringing up. Obviously there's a new administration in the United States, federal administration in the U.S. Has it brought much change to the regulation conversation at this point? And if not, are there changes that are expected?
Yeah, it's great to be here and a great topic. I'd say a 180 is probably a bit of an understatement, just in terms of the approach of this administration versus the previous administration. I think most of us are coming to you from Denver today, but I'm typically based in DC, and it's a very different place these days, than it was under the previous administration. I don't think we've seen, crypto is obviously a very bipartisan issue. I want to make that clear, as Martin and the other panelists have been talking about. There is just mainstream adoption here and just work to be done that, it's the future of finance. But to have the president and his administration not only embrace the issue on the campaign trail, but also then make it, a huge first 100 days priority has been incredibly encouraging. Seeing the appointments that he's making, having Brian Quintens go to the CFTC was obviously a huge win for the industry. We're very excited about that. And then across the agencies, right, you're seeing UEDA and crypto mom Hester Peirce, running with this crypto task force. We've obviously never had anything like that. The joke, sort of in the previous administration, when you were talking about whether it's centralized exchanges or DeFi players, was just come in and register, right? Just come in and talk to us. And the reality was that if you went in and talked to them, you're probably going to leave with an enforcement action. And so to see real conversations happening between regulators and industry players is incredibly promising. The president came out with his executive order highlighting a bunch of very high-level priorities for digital assets, and the key players who are essentially carrying that out. One is obviously David Sachs, who's in the sort of crypto and AI czar role, and then what's been very encouraging. I actually had a conversation on Monday with sort of the, I guess you could call him the understar of crypto, Bo Hines, who has been an absolute ally to the industry and just a sponge, learning about what are the issues that we need, where does the education need to happen, so that we can get clarity for the industry and go forward, to build without these kind of constant threats. And I think, all the panelists have talked about just this level of clarity, right? So I am in Denver, but on Wednesday I was on the Hill with Blockchain Association. It's a great trade association, doing good work in the space, talking specifically to legislators about the IRS DeFi broker rule, which is, knock on wood, hopefully going to be overturned, or rescinded in this administration. The truth about DeFi and sort of legislators is we're still just in such early innings, just in terms of explaining how this works, right? It's beyond peer-to-peer finance. It's, what information can a front end collect, right? And how does that play into how we can be regulated? And so just absolute night and day in going in and talking to the administration and this current Congress on the issues, sort of on equal footing and not on the back foot that we were in the previous administration.
Okay, great. Well, I appreciate your thoughts, and I appreciate each of you on your individual thoughts for those questions, and actually to kind of continue on from that last question and combine some of the other thoughts. For all of you, let's talk about it seems like the communication with regulators at least seems supposed to be changing, evolving. New frontier, and how is that seen to the rest of you? And were there you already talked about some things being reversed, but were there other regulations that have been pending that you've been kind of like watching? Any kind of like other further thoughts on what might become of those things that might have been on the books to go into effect this year, but now there are new conversations potential?
Yeah, I'll chime in on that front. And just in terms of the regulators and the people that are actually taking office, Gerald made a good point in which they're actually willing to engage in an honest conversation. And so they're looking at DeFi, they're looking at the future of crypto, and they're saying, this is something that we want to own in America. We want the future of it to be in America. We want entrepreneurs to build here. We want entrepreneurs to make their future here. And so it's important that they look at this industry not as a risk, but as something that they should help support. And I think when we look at how people are going to continue to engage with regulators, it's going to be from a place of equal footing. We looked at a prior point where the SEC was very hostile against crypto companies and pushing people offshores actively. When you look at founders in the crypto industry, many people here at East Denver, they're looking at, well, we have 3 different entities. Some are in the Caymans, some are in the BVIs, Singapore, looking at Switzerland as well. So it's a matter of taking all that offshoring and finding a way to make it here in America again, and making sure it's safer and has a future that is more, long-term aligned, and something that people can buy into for making DeFi more accessible and making DeFi actually usable for everyday people.
To build on top of that point, I think one thing that is really exciting for the industry is the stablecoin bill, which is expected to be passed, somewhere like the next 12, 18 months. Stablecoins really are the oil to blockchains, right? Like almost every application is dependent on stablecoins, whether it's lending, trading, betting markets. Pretty much any application you imagine uses stablecoins. I think Bank of America, the CEO was doing an interview this week where he actually said, once that bill is going to be in place, we're going to launch our own stablecoin, right? So I think the large financial institutions are going to use that to make their move. And we know with stablecoins that it really is sort of a winner takes all market, right? There's 2 massive stablecoins right now, USDT, USDC. So you can imagine that these large financial institutions are going to compete very aggressively, to launch their stablecoins, get them adopted. The way to get them adopted is to have use cases, right? And to have products that users can actually use. So I think once that is passed, that's going to be a massive catalyst, for the industry. And for all of us with our DeFi products, that's going to, just have users knocking on our door to come use us.
Go ahead, Wenny.
Yeah, thank you. So from SynFutures, our own experience, we engaged, counsels from different regions, including the U.S., right, and offshore, Singapore, and everywhere. And before this administration, it is impossible for us to navigate the regulatory landscape in the U.S. And what we approach, and similar to many other DeFis, is we just block the IP access from the U.S., right? Because there's no way for us to understand how to structure the products in a way that's compliant to the U.S. regulatory framework. And of course, I think after, according to what everybody else is talking about, now we are definitely more enthusiastic, and we're more than happy to participate in conversations with the regulators. And also from where I'm based out of, I'm normally based out of Hong Kong. So Hong Kong has been taking a very, I would say, a quite aggressive approach from the regulatory side. The regulators, SFC, they're really open, and they actually gives the banking industry a mandate that they cannot just turn down crypto companies from opening a bank and then facilitating some services. And this is all progressing very, very fast. So yeah.
Yeah, I'll just add one more point to that. I think this return to kind of a sane approach from a regulatory perspective is really refreshing. I mean, talking about large institutions adopting this technology, they want to adopt it because it works, right? Like, I think that's sort of the underlying point here is DeFi works, but without predictability in the regulatory environment, you really couldn't be confident building long-term in America. And so at Sei Labs and the broader Sei ecosystem, we've been very excited about sort of returning to this sort of a states-centric approach. I just want to point out, I think that the other challenge that we had in the previous administration was they really didn't do a great job of catching these bad actors, right? It was actually a lot of the enforcement action we saw was sort of small mom and pop projects, things like UkiDAO or library, where it was small groups trying to do something interesting with technology, again, that fundamentally worked. And so those projects were somehow paying the price while, FTX and Three Arrows and, some of the other, I guess, actors who actually maybe did some damage in the market were not caught appropriately. So it's one of those things where we're very excited to see the United States kind of regain that footing, and obviously the deepest markets, we want to see DeFi flourish here, and so excited about the future there.
Gotcha. Okay, great. Let's take that a bit further. How has DeFi matured in its use, acceptance, and this understanding that we're starting to see, and again, how does that compare with those earlier expectations, earlier impressions that we had from not just regulators, but from kind of like that mass, the masses, because it's not just the regulators, the people that they try to speak to and say like, oh, we believe this is what's going on with DeFi. So where we are in the maturity of DeFi, and how is that again compared to what were those early first impressions that seem to have been out there?
Sure, yeah, I'll chime in again there just on the main question people ask in DeFi that I think is important to drill down to on where does the yield come from, and where are these sources of yield, and where are we finding ways to actually make DeFi useful and productive for everyone that's going to engage in the ecosystem. So when you talk about stablecoins and the emergence there, right now between USDC, USDT, and other stablecoin providers, they're the 16th largest holder of US Treasuries. So that's real tangible yield that can be passed on to users and be used in the ecosystem and growing the pie for stablecoin adoption and other means of DeFi there. So I think right now we're looking at a total industry that's fighting for this TVL, fighting for ways of bridging on liquidity to their chains, to their platforms, and to their apps. And so it's an active process that's being sorted out in real time. And I think alongside of regulation and a thoughtful and meaningful way of engaging with regulators, we can help solve some of those problems and challenges to make sure that we have the right means of onboarding liquidity, onboarding TVL, and making DeFi safe to use.
Anyone else have thoughts on that?
Yeah, I can quickly speak on that because, we are as I just mentioned, we are fully on-chain decentralized exchange. We facilitate on any day on average 600 million to 1 billion trading volume because we do see how people are enjoying the equal access open finance. And we do believe DeFi is the most important, if not the most important product that actually reach a product market fit on the blockchain. So and for us, initially during DeFi summer, there are a lot of smart contract attack, and people are criticizing the industry being very open to the bad actors. But through the year, we do see the nature of the permissionless system is 24/7. It never stops. It's open to stress testing. It never ends. And so as an industry as a whole, we are really just becoming stronger on a daily basis. So I do see more innovations, especially now there are more layer 2s, more innovative layer 1s coming up. The block time and then the TPS, like transaction time, has been improved greatly. So this all will facilitate the on-chain trading scene much better. Yeah.
And to build on those points of Winnie, I think that you obviously need the users, right? And we just discussed the users are very eager to come. Especially the large institutions, they just need a level playing field and clear regulations. And then the other thing they will look for is maturity in the product, and that has to do with how many transactions can a blockchain process. Have the liquidation engines been tested? What does the UX look like, right? Is it sort of intuitive? And I think on the last side on the product, I really think we are ready, right? Like even during the market volatility of today, you see that every DeFi lending protocol just works, right? Like some users get liquidated, but it's all safe for the lenders. So I think that's a massive win for the industry, and that gives confidence during each of these cycles. That builds the confidence for these large institutions to come. So once we have those rules, I think it's going to be a Cambrian explosion of adoption from the institutions, and then they're going to make it available to consumers, right? So they're probably going to be the front ends, and with the back end being all these DeFi applications, giving access to their users. So yeah, we are more excited than ever about the next 12 to 24 months. You've got to zoom out a bit with the price action of this week. But I think, it's a very bullish environment for real DeFi builders and, builders in the space.
Yeah. If I could briefly add on to that, I think the sort of TPS or the speed and level playing field conversation is really important. Markets love efficiency. And I think obviously the first sort of block, brick you can have there is regulatory clarity. But in the past, because of whether it's information asymmetry or a lack of clarity or technology, famously just a discrepancy in the Bitcoin price was a huge arbitrage opportunity, for people. And so Sei as one of those layer 1s, doing a lot of interesting work. We just put out a piece on gigagas enabling really, really high, really impressive TPS. And I think what you're going to see is a lot of the same thing that happened in traditional commodities markets. You talk about actually moving physical servers closer to the exchange, right? So that we can be getting as real time as possible. And so now that we have kind of this certainty on, okay, this thing is going to continue to exist, the markets are there, institutions are coming, I think you'll see whether it's layer 1s or other technology players in the industry continue to innovate so that we can have the most efficient markets, technologically possible. And so that's something I'm really excited about as well.
Gotcha. Okay, great. One last question to close us all out. Are there, and kind of speaking back to how things are evolving with regulators, but are there ways that the DeFi sector could self-regulate or at least take actions to kind of potentially allay worries before regulators start clenching up, and also at the same time maintain the innovation that has been part of the space?
Yeah, so looking at everything that happened with the Bybit hack last week, that definitely ran the news cycle for the crypto space. And so with great power comes great responsibility, and self-regulation and security around everything we're building in DeFi is of the utmost importance right now as we put more and more liquidity and TVL into all of these chains and products. So something as simple like a safe hack that was a UI injection into something that secures $30+ billion in value is insane that it can still happen, but it's still very much a real risk. And so like anything in crypto, it can be used for good, it can be used for bad. And traditionally, crypto has been viewed as being used for bad. So with the people in the industry like ZachXBT and others that can come help and do analysis and investigations and track down ways of illicit use of crypto and making us help kind of self-regulate and find ways to create this UI layer and wallet layer that is more less error prone and is actually able to be viewed in a way that is similar to our traditional finance ecosystem, I think is useful. So I think it's a delicate balance between ensuring we have the same properties of crypto that we're used to, having permissionless finance, having decentralization, sticking true to the crypto ethos, but also having a safe and easy means for people to come into the ecosystem and have that similar UX that they're used to, that they see at a Wells Fargo, Bank of America, or other institutions that they trust.
Yeah, and to build on that, I think the two most used words by the administration are common sense.
Mm-hmm.
So, I think we can all expect that a lot of these rules are going to be common sense, right? And if you think, what is common sense? Great security, right? It's just as Alan mentioned, it's common sense. Another thing is, having the proper disclosures, being transparent, like that's going to be common sense. We also have KYC AML for, some of our products on Maple, that's common sense. So I think, if we sort of build on the institutional principles that, have been implemented over the last 100 years in finance, I think a lot of those things are going to continue in the future. And, we just need to implement those with common sense and then, engage with the regulators to get rules that sort of match, what DeFi really is.
I think in DeFi, we always say like code is the law, right? So it is very. I actually become more bullish after the Libra incident happened of the overall industry, because you can see like how everything is reflected on chain and how quickly all the bad actors are people can, everything can be seen transparently on chain, and people can, basically they can hold bad actors accountable through code, through the smart contract. So that is something I think will be, I think as long as the regulators are willing to listen to the market participants and understand more of the blockchain technologies and understand how smart contract run as a whole, there will be a lot of progress. And also, we are happy, like as a DeFi protocol, we don't really do KYC at this moment because there's just like no, we run on a smart contract, but we're happy to adopt a ZK based, a ZK based verification system. That's why I'm super bullish on ZK as well. So essentially, you don't really get people's personal information, but at the same time, they're not the bad actors. So yeah, over time, I think this is all gonna become a norm for the people, just like how we use banking these days. Yeah.
Yeah, I really agree with everything that's been said. I think it's interesting just to go back to this idea of self-regulation. One of the things that you need for a market to be free and efficient is choice, right? And when you have a lack of regulatory clarity, you are limiting the options that people have, right? So bringing up something like geofencing, there are ways around that, right? I mean, it's common sense, right? Like it's just reality. I would even say the choice of whether somebody uses USDC versus USDT, like there are choices that people are making, whether it's they want to be more compliant, they want to be more institutional focused, and so what I hope that we get this idea that, if I want to go open a bank account, there actually, since the financial crisis, there are famously kind of fewer banks than there were pre-financial crisis. But if the same thing continues to happen in DeFi and in crypto more broadly, where certain, like if I want to interact with institutional actors and, I'm comfortable being KYC and AML verified and all that, I go to Maple. If I want to work with some kind of another pool, I go there. If I want to do something that's, I'm a bit technically savvy and I just want to go straight to the smart contracts, I can do that, right? What we need is just this baseline level playing field, which I think, everyone on this panel has used. I think we're getting there. And then I just look forward to users and institutions having kind of a choice that does, by way of an efficient market, kind of regulate itself, right? Like the industry operators who provide the best services, the best user experience, will win out, and excited to see that.
Gotcha. Great, awesome. All right, well, that's the time we have. Gerald, Wenny, Alan, Martin, you've all been fantastic. Really appreciate your input, and you really brought some great insights that I hope our audience can definitely take in and have a kind of perspective of what might be in the works ahead for DeFi, potentially in this, like what we call this new frontier for them, for you all. So again, I thank you for the time today.
Thanks for having me.
Thank you, everyone.
Thank you.
Thank you.
You can find the Das Won't Hunt podcast on Podbean, Spotify, and other popular podcast platforms.